All right, team, how you doing? This is Renzo again from Task Force Financial Freedom, or TF3. And today we're going to do another recap for a very good and productive day, especially for Mike. He's here on the camera, and for my wife. I hesitated a little bit on my entries, but it's all about playing it safe. But we still made a good profits for the day, and Mike has been crushing it, following our same strategy. So, Mike, why don't you talk us through the pre-market analysis we conducted before the market opened? So, I'm gonna make the 5 minutes. Actually, I'm gonna move it to the 1 hour, and I'm gonna expand this chart so you can talk us through what we learned and what we did today, what we discussed pre-market. Okay. So there you go.
So let's see, scroll. So it seems like yesterday it was like on a slow uptrend, and then when we were done yesterday, it just shot up like completely. It skyrocketed.
Right.
And then like when market opened today, it dropped and kind of did little ups and downs.
Okay. So remember yesterday we marked this area right here for a potential bounce because that is the pre-market high, right? So we played it to the upside, but then when it reversed, it went straight into that area and it formed a base, and then it went up. But we missed all this, but it's okay because from here to here we made enough profits for the day, right?
Yes, minimize your loss.
Huh?
Well, one thing I want to say.
Yep.
It's not about how much money you can make. It's about minimizing your losses.
It's minimizing your losses. That's correct. So, if the trade goes against you, you got to get out quickly so you minimize your losses. So I think the most we lost on a trade since we've been doing the same strategy has been what, like $20?
Like $20,
$30, right? So that's better than losing $300, $3,000. So if you lose $30, you can make up the loss in the next trade. So you just look for a better entry. All right, so let's go over a few things. So the main thing that we've been talking about is what? Support and resistance, remember?
Yes, support and resistance.
So another thing that we talked about has been supply and demand. So supply and demand is a little different from support and resistance, right? So supply and demand is an area of where the buyers and the sellers are fighting to determine whether or not the price is going to go up or down, and that is also a good area for a reversal. So not only we basing our strategy on support and resistance, but we also identifying areas of supply and demand. So supply are areas above the price when the market opens, and demand are areas below the price. Okay, so this morning what we saw is this. So we are at all-time highs with the Nasdaq and with the SPY. So that means that there is no ceiling, there is no resistance, right? There's only bottoms. And what we say is that pre-market and yesterday when it closed, we had this big area of support and resistance right over here. You see it?
Yes.
So we say that if the market opens and it doesn't continue to go high, we're going to see if it goes down and where it's going to have opportunities for bounces, right? So we identified this area as number one, then this area number two, because that's where it had resistance yesterday. And then we decided to do this area right over here because that's where it found support. However, though, if it continued to break down, where is the next area? And we identify this area of support and resistance based off the data from a couple days ago. See that? Resistance, 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 broke the resistance. So now it could be a good area for support. And in fact, what happened is that the market opened and it went down, and there were some opportunities that we took, especially you, for movements up and down. So let's go to the 1 minute chart and let's talk about our entries and exits, okay? So that we can analyze why we did what we did. Is that today? Let's see. Yep, that is today. So as soon as the market open, what's the first thing we gotta do, Mike?
So first thing we do when market opens is I guess.
We gotta wait, right?
Yeah.
Okay.
You gotta be patient. You don't wanna be too eager and get in right away. It's better to be patient. Get like the feel of what the market's gonna do today.
Exactly. And the reason why is because a lot of times, right? A lot of times when the market moves high quickly, the next day people are gonna sell because they want to take their profits, right? So that might create an
Yes.
imbalance in the market. So we don't want to jump in right after the market opens because we might get stopped out and then we lose. So one thing that we need to remember is that we as day traders, we're trading from our home. We're not moving the market. We're just picking up the leftovers. Big institutions are moving the market. So if we just ride the wave with the big institutions, we're gonna be on the good side of the trade. All right. So let's talk about this morning. So I put back the 5 minutes on the left, and then 1 minute on the right, and this is why. Because let's take a look at some other indicators for support and resistance. We talked about the high and the day lows right here, high of the day, low of the day. And this is populated by Thinkorswim. So if you go to Thinkorswim, you go to your studies right here, edit studies, and type high and low, it's going to give you high and low of the day. But also on previous videos, we talked about the moving averages and how they can act as support and resistance, right? You watched that video?
Yeah. First minute I watched it.
Yeah, so it's very important to understand that a moving average can act as support and resistance, and we see it today. Today was a very good example, a prime example.
Yes, it's a very good example.
Right, because of this, right? So the market opens and boom, it comes down and it breaks below the low of the day. But we didn't get in on any puts at the beginning because we knew that we had some areas of support and resistance, right? We had this area that we drew pre-market, we had this area of pre-market, and guess what happened? It comes to that area and it starts to bounce, right? But then we see, okay, it has a very good opportunity for bouncing, and then we see a reversal. We see a reversal on the TTN squeeze. We see a reversal on the MACD. But we only played a small calls. And why do you think the reason why to go from here just to here?
Oh, what up, froze? Wow, my screen froze.
Oh, your screen froze. Okay.
Yeah, my screen froze.
Are you good now?
Alright, so ask me again because
Okay.
my screen froze.
So we decided to enter on.
I think I'm good. Yeah.
Okay, so we decided to enter on a call. The first call was right here, right at the second bounce right here, but we got out somewhere over here. Remember why?
Yes.
Why did we get out here? If we're looking at the 1 minute, why did we decide to get out right here?
That looks like resistance from the day before.
Well, actually, look at the left side. So that's resistance on the 5 minutes, right? Because what was support
That too.
now is resistance, right? So check this out. This is exactly a trade that we did today. We got in here, somewhere over here, and we got out here. And it resisted, and it came back down to test the same support. And I think you did this right here. I think you did this call right here again, and you got out of the same area. We say be careful because it needs to push through heavy. It needs to push through for this to continue to go up. But if it went up, now we have resistance right over here. In this case, it didn't do it. And then there was a couple of puts that we did because we know there was resistance. Now, the other thing we did is this. We identified that for the first hour of the day, right, the price was in a range. So it was down, up, down to the same level, up to the same level, down to the same bottom, up to the same top, down to the same bottom, down to the same top. So what we decided to do is this, is we actually, what I did was I put a square rectangle right here, right, to identify this range. Remember that right there that we said, let me make it a different color. I want to make it a darker blue. Okay, and we said right now the price is in a range. So the only thing we can do right now is wait for the price to break out to the upside, outside this box, which will be above the moving average or below this box, and then it's probably going to come to the next level. So that's exactly what we did. So once we saw that the price was coming down, right, it broke out of this, did we get in right as soon as it broke below the box, or what did we do? Or what should we do?
So the preferred thing to do when it breaks is to wait to see what the next candle or two does, because you want to stay either above or below the box if you want to enter a trade.
Good job.
Because if you enter right when it's breaking out, it might reverse back on you, and you might lose a little something. So it's better to wait.
Because it could be a fake out, right?
Yes.
Okay, so another thing we did is hold on a second. As we speak right now, I think that the price is trying to reverse to the upside. So, well, I'm going to leave it alone. But I'm going to point at something real quick. We also have these indicators that we've been using to give us more confirmation. So if you see on the 5 minutes, this is the NASDAQ. We already have a reversal up, right? But it doesn't mean that it's going to go up. We still need to have good indications. And the indications that we have is we have this regression line going up. We have the TTM squeeze going into the positive, and we got the MACD kind of wanting to break up. But the reason I like to use this is because it gives us a well-established area of risk. So in this case, I don't know if we can see it, but there's a line right here that populates with this bubble. So that line means that if the price goes below that line, then this is not valid anymore. So we have this much risk to this much reward, right? But I'm gonna leave it alone because we're making a video and I don't want to compromise getting stopped out. But yeah, but what you said was completely correct. So right now we break out to the downside from this box, and then we wait for the next candle. The next candle was a doji, but then the next candle was a negative candle, right? A down candle, and then we took it for a couple of minutes. We only took it for a couple minutes because if you see, we were really close to this other area right here, and this other area is a supply and demand. So in this case, it was a demand. And we got out, and then we went back in when we saw a reversal, but we only took it to this area because we know that that's been a resistance, right? An area of resistance. So we took advantage of this little, like what, 3-4 minute push downs and push ups today, and we continue to do it. So now once it started getting resistance right here, what did we say?
See resistance. We got rejected.
We got rejected right here again, and then we get a reversal signal to the downside, right? But if you see, this is also a range. So we say if we did this right here, we put another box right here, and we said if the price, right, we have to wait because right now it's in a range. So when it's in a range, it's a little difficult to see what's going to happen. So what we said is if the price breaks above this range, then we're going to play to the moving average because we know that it's been resisted. But if it breaks down below this box, now we're going to play down to the area of supply and demand. And that's what we did. So the price broke down and we did a couple of trades, and look, it continued to break down, right? It continued to break down, but we identified this other area for support and resistance. So look at the price, what it's doing. It comes down, right? And it's trying to get back in. So right now it's in this area of supply and demand. So we're going to see if our strategy, we can do it live and see if it's going to work. So we're going to wait until the price breaks above this point, right? And we're just going to play it for a couple points to the upside. But right now it has a better possibility for a reversal to the upside, and that's exactly what we talked about this morning. We want to be on the right side of the trade. We don't want to be like guessing when to enter and when to exit the trades, because then we don't have we don't have a plan. So we need to have a well-determined plan in the morning. We got to stick to it, and we got to stick to our rules. So let's see if this is going to push through that little high that it just provided. And if it does, we're going to get in for just a quick couple minutes, right? And that is going to continue to validate our strategy of the breakouts. Because technically, all we've been doing is support resistance and breakups or breakouts to the upside and breakouts to the downside. So once we've been doing that, we've been collecting profits, and it's been very, a steady progression. So how much have you collected today from those small trades?
So for those small, I collected $1,450.
$1,400 today.
Yeah, $1,450.
So we did the same strategy yesterday, but yesterday we did the strategy going up, right? It was breakouts to the upside. So how was your profits yesterday?
My profits yesterday made 1,220.
Woo! And that was today's what? Today's Wednesday, right?
Yes.
Okay, so in the last couple of days, you done really good. I mean, you can potentially say that's your profits for the week, right? Okay, I got out of my little trade. I think it gave me like $50 only. It's not much, but you know, collecting all.
Hey,
the
it's
small,
better than zero.
it's better than zero, but collecting all the small trades that we done today were very, very good. So, you know, good job, Mike. You're not only you've been sticking to the same strategy and the same plan, but you've been very disciplined with your exits. So the main thing is this, like you said, is avoid losing money. So you can get in, but you got to keep your exits or your risk very tight, and you let your runners go, right? So you collect as much money as possible. Also, my wife is still trading right now. She's trading the SPY. So we tag teaming the market, and she's been doing a really good job. Our strategies are very, very similar. But because I'm doing the class in the morning, I talk more than I watch the indicators. But between her, you, Mike, and me, I think we've been doing a good validating this strategy, and it's paying off. So, what any observations? You were talking about the indicators a few minutes ago, and you were making an observation on why to get in and why to not get in, right?
Well, yeah, I think it's what I said yesterday. Like, they're not accurate most of the time. So
yeah, I think his computer froze. Okay, so what Mike was saying is that the indicators, he was saying, they're not accurate all the time, and it's not necessarily. Oh, Mike, you're back? I think okay. So what he was saying is that the indicators are not accurate. So it's not that they're not accurate; it's that all indicators lag. So if you watch the video that I made about indicators, you'll see that the indicators cannot tell you what's going to happen in the future. What they can tell you is what's already happened in the past, and they can give you a better understanding of what might be up, what might be coming up next. For example, the TTM squeeze. If we see the TTM squeeze is already going from negative to positive, right? But it doesn't mean that it's going to stay positive. It could be a quick retracement just to come back down. The MACD is turning into the green, so that's a very good possibility to go up. So we got to combine the indicators. So we have a reversal indicator right here. We have the linear regression right here. We have the TTM squeeze. So everything is telling us, yeah, this might continue to go up, right? We're in a good area of support and resistance, which was this. Now we're inside a supply and demand. But if we look at the 1 minute, the 1 minute is going down. So we gotta wait for a bounce, and then the two time frames have to be in accordance. So it makes more sense to get in a trade. If you get in a trade right now on a call, and this comes back down, you're going to be negative for a couple minutes, maybe a couple hours before it goes back up. So we got to wait for good confirmation. So indicators work. We've been validating this reversal indicator that I downloaded from another website. So I didn't invent it. I didn't create it. I didn't write it. I'm not going to take credit for this. But I am going to take credit for using it and combining it with the chart analysis and the other indicators that I have. And ultimately, I don't just rely on the indicators, but I look at the price action, and I also have my wife confirm my entries and my exits, because since I'm talking through the class in the morning with Mike, I sometimes get distracted, but I have my wife as double confirmation. Okay, Mike, you back? Looks like your screen froze.
Mm-hmm.
Okay, so we're talking about the indicators that are not necessarily not accurate, but they lag. So they only show you what's already happened. They don't show you what's is about to happen, right?
Mm-hmm.
Right. That's why you have to combine them, and you have to still read the chart and make sure that it makes sense to you and not just rely on the indicator. But anyways, I think it's been a very good week. I'm done trading. I really missed out on this bounce right here, which remember when the price was going down and I said, I know for a fact that the better bounce, the better trade is going to be right here because it's going to go in one direction. But we did good for the day. And then I want to clock out because I have to go out to an appointment. But let's continue doing this and validate it. And anything you want to say to anybody who wants to watch this video and wants to learn?
So be patient before you jump into a trade.
Okay. Yep. That's the main thing is
because if you're too eager, it might reverse on you at any given time, and you might end up losing.
That's correct. So
and that's all.
Yep. And we gotta have a plan, right? We gotta have a plan at the beginning of the day. So with no plan, we don't know when to get in, when to get out, and when to cut our losses, right? So that's the main thing. We gotta continue to work and improve our plan. Okay, so all right. So with all of that, good trades this whole week. The last couple of days, well, actually since last week, you've been crushing it. So continue the good work, and then let's see how much more we can do. Okay, so same time tomorrow.
Okay.
All right. Take care.